Hey guys, good afternoon, everybody. Today is Wednesday, May 17th. It is 1:59 right now. Our scheduled mentoring sessions for 2 p.m. So I'm going to go ahead and set up this room real quick and we'll get started with our mentoring session for today. So I don't have any specific questions lined up aside from obviously liquidity. So if you guys want to review that, that'll be great. If not, feel free to put whatever questions you guys have in the chat and I will cover them in the order that they come in. So just a couple of things here to update. And we should be good to go. All right, let me get this link sent out to premium groups real quick. That's good. Hey, Barty, how's it going? All right, cool. Looks like people are making their way in right now. So I'm going to go ahead and give it a few moments for people to join. And we will make our review shortly. So a couple of things here to update. All right, guys, good afternoon, everybody. Let's get a few more moments. If you guys have any questions, feel free to put them in the chat. I don't really have much of a schedule for today aside from looking at the liquidity trades. So I think that's like my main focus. If there's anything that you guys want me to cover or review, feel free to put your questions in the chat, guys. I'm here to help you guys out. So whatever you guys need help with, just drop your questions and we will answer whatever you guys need help with. Let me just post this link up at the other pages real quick. All right, got one there. All right, solid. Hey, CJ, how's it going? I'm just going to post this up real quick. All right, so I'll just give it a few moments for people to join, and then we will get started shortly. Kodi. All right. All right, so I'll just wait a little longer, and then we'll review shortly. All right, looks like people are still making their way in. Let's see, Barty said that we had a liquidity push at 33,255. Yeah, I'll take a look at it. I mean, it's not the liquidity push that I typically look for, but I'll take a look at it. It's not a big deal. It's, the liquidity push has still come through throughout the day, guys. It's just the main one I take is just the one on open, but I'll take a look at it if you want me to. And if there's anything else that you guys want me to look at, just drop your questions in the chat. So, all right, guys, looks like majority of people are here or are currently still joining. So good afternoon, everybody. Today's Wednesday, May 17th. It is 2:03 right now. For this mentoring session, I don't really have any questions that people asked, prior to the start. So I don't necessarily have anything specific to cover aside from the liquidity pushes that a lot of people are wanting me to review. So I'm just going to look at that real quick. And if there's any other questions, let me know. All right, so let me see. Let's see. Andrew said, "Can we get a Kodi Kai trade shirt whenever we pass a new challenge? But can we go over triple confluence? Like, if you guys get funded and get a payout, message me. I'll send you a shirt. How about that? That gives you guys motivation to actually get funded and actually get payouts. So, like, getting funded isn't necessarily the hardest part. I think staying funded and actually getting payouts is like really the hard part. So I feel like a lot of people, once they get funded, they start to change their strategy for whatever reason. Sometimes people just get super overly confident, and I see this every time. It's like, it drives me insane, because like people will follow me trading and then they'll get funded, and then as soon as they get funded, they start doing their own strategies, and they just blow the account. So if you guys do get funded and you guys get at least one payout, message me and I'll send you a shirt, because that just shows me that proof of concept here, that you guys are actually following directions and staying consistent. Because I'll see a lot of people be consistent during the challenge phase and verification, and once they get funded, they do their own thing. It's just, I don't know, it's crazy. It is pretty crazy. So, all right, I'm going to go over the, so I'll review the liquidity push that we took this morning. And then after that, we will take a look at, so I'm marking up liquidity right here from this morning. I'll look at the liquidity push, and I'll look over at the other liquidity pushes that Barty mentioned, and then, we'll go from there. But yeah, if you guys have any questions, feel free to put them in the chat. Andrew also wants me to take a look at the triple confluence, so I'll take a look at that as well. I think there was one entry that came up today, if not yesterday. They don't come up too often, but when they do come up, they're usually a hitter. Because it requires, basically, so the triple confluence is basically 3 strategies in one. So that's why it's called a triple confluence, because you have 3 different strategies. All of the strategies applied have very high win rates. So you have like 3 on the same exact candle, odds of that trade hitting are very likely. So take a look at that. I'm just marking up liquidity here. I'm going to show you guys a trade we took this morning for you guys here who missed it. The strategy has been a favorite to everybody who's been in the group for a while, like a lot of the older members. A lot of them still apply it. I just stopped applying it because, as I mentioned on the live today, a lot of people get greedy, and it's understandable, because the strategy is so easy that people just want to take every single trade that comes up, when you guys should be focusing on quality entries. So, all right, we have the liquidity marked up here, and that's pretty much it. So let me go back to the 1 minute. All right, so you guys saw what I did there. I marked up liquidity. Again, if you guys need a refresher on like how to identify liquidity, basically the liquidity that I marked up here are the high lows that have not been tested. You guys can do this by hand if you guys don't have the indicators, but it's going to be difficult because you guys can't see the high lows that I marked up, right? It's easier for me to mark up because everything's already marked up for me. So I don't have to like go back and identify stuff. I just mark up where these high lows are. So I pretty much marked up liquidity where these high lows are untested. The reason why I do that is because whenever people enter trades, they typically place their stop loss at the previous swing. I'm sure you guys have learned that before, whether it be from me or from any other group that you guys have been in the past. So like basically go down to the 10-minute, you guys can see that there's a lot of high lows here that have not been tested, right? There's areas that where price got close to it, but not actually touch it. And generally, if you enter a sell at any of these points, typically you're going to put your stop loss at the previous swing. So these are all the swings that have not been tested. These are the swings where stop losses are sitting. And that's why I call it liquidity, because when those stop losses get hit, the trade has to shift, and it's probably going to push further in that direction. So this right here is the liquidity. The trade that we took this morning was down here. So basically markup liquidity, I look for that area to get hit. You can see our price kind of bounced around a bit. Our entry happened somewhere down here. Went for 300 pips, quick move. So price came down right here, came back down. And then I think eventually right here, it finally hit, maybe 2 candles later. Yeah, there we go. So it finally filled right there, dropped down, and went straight to full TP. That's the liquidity push that we took this morning. I have it marked up over here in the group. So this is the trade we took this morning. You guys can see the same markup right here. It's the same markup that I'm showing you right here. And that's where I locked in, this profit of about 7,000 off that one trade. Happens super quick, within a few minutes. That's typically how this trade moves. If the trade runs longer than a few minutes, it's usually risky. At that point, it's like, okay, pull out, because you pretty much, the liquidity that you're looking for didn't get hit. So that probably wasn't a strong area where a lot of stop losses were sitting. So that's the trade that I took there. That's how I locked in this profit here, 6,900 on my first account, 6,700 on my second account, 3,000 on my third account, 3,070 on my fourth account, and 3,020 on my fifth account. So total profit about 22,000 for the day, basically just off that one trade. So this is basically what we've been applying. So Barty over here mentioned that there was another one that came up. I'll take a look at that later. I'll just scroll forward and show you guys where those came up. But other than that, we'll continue along. So let's see, question from iPhone. iPhone's asking, is entry for that once liquidity line gets touched? Yes, that is correct. Because if you enter too late, then, you can enter late if it pulls back. Like for example, right here, price kind of pulled back a little bit. So you could have entered on the next candle. But typically you should enter on the first candle because you're going to catch the liquidity as price blasts right through. So iPhone's fault question is, and the TP is at the next liquidity line? No, it's a fixed TP stop loss, 300 pips. So we don't use the other line. The other line is just another area of liquidity. Some people take the other area down here because, obviously there's another entry you can take. I don't usually take the next one. I just take the first one. So if you took the second one right here, it still would have hit TP as well. For the first one, we go for 300 pips because that's the first liquidity. Typically, volatility will fall in that direction. But for the next area of liquidity, typically go for 100 pips. Because you can see right here, if you took the next liquidity push, it would have hit your TP. Like it would have blasted right through your TP. And then look where it goes from here. It would have shot back up and would have stopped you out, right? So that's why you got to go. You can't get greedy for these moves. And this is why I don't like teaching this strategy, because people get greedy, right? First move is a perfect move, easy 300 pips. And then right here, people get greedy. I say to go for 100 pips. Some people don't want to go for that. They go for a bigger move and they would have gone stopped out. So that's why I don't necessarily teach this very often. I'll take the first trade, but usually I'm not going to take the next one because I've already locked in like 7,000 off that trade, right? I don't need to throw this away. I'm pretty satisfied with that. If you lock in about 7,000 a day, guys, you guys do that. You guys do the math. And it doesn't have to be every day. Like say you trade like maybe 2 or 3 trades a day, right? Or 2 or 3 trades a week. So you do 7,000 and just being conservative here. Say you trade 3 days a week. Not that it's always going to win, but most of the time it's going to win. That's 21,000 a week, right? Times 4, it's 84,000 a month. So you just do the math there. You got to be satisfied with a certain amount of profit. If you get too greedy, then you're just gonna throw away profit. So for me personally, I'm okay with just the first one. But as like Barty over here mentioned, other liquidity pushes did come up. Like for example, down here, the second one came up as well. And you guys just have to understand, like, your threshold. Like have some sort of goal in mind. If you make 1,000 a day or whatever a day, just keep that in mind, because when you start to think like, okay, the profit is unlimited, which technically can be unlimited, that's where you start to get greedy and then you start to take dumb trades. So again, for the first trade, you go for 300 pips. Next trades, you probably want to go only for 100 because you're going to get to a point where price is overextended like it was here, and it's going to have to retrace back to some extent. So, yeah, CJ said, I'm about to get some KT drip. Can't wait for my shirt. I know, CJ, let's get you funded and get you that first payout. And then just, send me a screenshot of your payout. I'm going to send you a shirt. Let's see. Rev said he got out at 10:30, came back and saw that YM climbed over 300 points. Yeah, let's take a look at that. Okay, so let's go forward to 8 o'clock. So let's just move forward over here because Barty said that, liquidity was getting hit after the live session. So let's move forward over here. Rev as well said that he got out at 10:30. So let's just keep pushing it and see where it goes. All right, so there's another area of liquidity right here. So as I mentioned, I don't typically take these trades because I'm usually done trading by 8. But Rev over here and Barty mentioned that there's another area of liquidity here that could have got hit. So again, right here, same thing as I mentioned, go for 100 pips, don't get greedy. Just get in and out of these positions. These liquidity pushes, they can push for a long direction, but odds are they're probably overextended. Like for example, right here, price started pushing up from this area right here, right? So if you measure price from this point to liquidity, let's see, that is a 1,800 pip move. That's a big move. So at that point, price is going to have to retrace. So if you take the liquidity push right here, your order would have gone filled, would have blasted right through and hit your TP. So if you took that liquidity push again right there, another full TP. I don't trade this late into the session, but if you did, another opportunity right there. And then here we go again, right? Another area of liquidity right here. As I mentioned, don't get greedy. There's multiple entries that come up. Just take the trades as they come. That's like the hardest thing for me to teach someone. Like I can show you guys a blueprint, but teaching you guys how to not be greedy is like nearly impossible because everybody's greedy, right? Doesn't matter how long you've been trading, greed's always going to come into play. So again, right here, there's more liquidity pushes. There's actually two right there. So depending if you took one or two, they both would have hit, right? This one would have hit, and then the one right after it would have hit too. So you guys can see the opportunities here are endless. You guys can take so many of these liquidity pushes if you wanted to, but once you hit your threshold, just I would just call it a day. Okay, price pulls back a little bit. Another area of liquidity right here. Blast right through it again. So if you guys look over here, there's probably like 4 or 5 liquidity areas that got knocked out. And you guys can see I already marked up these areas pre-market. So we already knew price was going to get to these points. Here we go again, another one. Like it's like super easy. As long as you don't get greedy, right? Because if you got greedy right here, you either would have gotten out in profit or you could have gotten screwed. I mean, depending on how you were taking this. So again, right there. Another one, full TP. Another one right there. This one over here. This is super overextended at this point. I wouldn't even take any more liquidity pushes once price got to this area right here. As you can see right here, you would have gone burnt. So you would have win, 2 wins before, and then 1 loss right here. So, I mean, it would balance out. You'd have like a bunch of wins and you'd still be in profit. But, at that point, how much do you really want to risk? Right? So I wouldn't do it, especially at this point. I probably would have stopped right here. I would have gone for maybe 1, maybe 2, and then I would have been done. But there's like 1, 2, 3, 4, 5, 6 wins here, and then like 3 wins prior, and then 1 loss right here. So 6 wins, 1 loss. I mean, and you could even keep looking for more areas of liquidity. This thing it's the gift that keeps on giving. You could if you really wanted to sit on the chart and just knock out all liquidity, you could watch and just wait. But for me personally, it's just not it's so stressful to stay on the chart for like hours and then just wait for these trades to come. But yeah, sure, you can make a lot of profit, but it just opens you up to possible losses as well. It's another liquidity right there. Full TP. So if I'm going to take liquidity like this, I want to see a retracement and pullback. If I see liquidity, retracement, pullback, then great. So that one right there hit full TP. Let's see if it comes through again over here. I think that's it. Price looks like it pulled back. And that's about it. So guys, check this out. So see how this liquidity over here didn't get hit? This is going to be safe for tomorrow. So when you trade tomorrow, this liquidity area is going to be here and we can wait for that to get hit tomorrow, right? So I'm over here back to current time. And you can see there's still liquidity sitting up here. So tomorrow when we trade live, you're going to see there's liquidity right here. This is probably going to be available for tomorrow. This is probably going to be available tomorrow. This is probably going to be available tomorrow. There's a lot of areas here. And then there's going to be a bunch of liquidity down here too. So, I mean, we got a lot of opportunities tomorrow. It's not just today. A lot of the ones that don't get tested today will get tested tomorrow. So tomorrow morning, I'm going to do the same thing, redraw the liquidity, and then we'll take it from there. Let's see. Nathan's asking, is there a indicator for liquidity? No, so there isn't. So the liquidity that I mark up is from the high-low indicator. I mean, there's probably an indicator that I could create for liquidity, but I prefer to do it by hand, because if you have an indicator, you're not going to be able to do it by like multiple time frames. So like if I was to make a liquidity indicator, there's going to be too many lines on the chart, right? So I technically could create one, but I'm not going to because it's it's easier to just start off the day in the morning, like get up like, I don't know, wake up like at 6 o'clock, market opens at 6:30, and then just mark up the areas of liquidity every morning. Because the problem with having the indicator is that if I make it too easy for people, they're just not going to do the work and they're just going to get greedy. And you should understand like how the market is moving and like where these levels are. Because if the indicator gets created and then people stop marking up liquidity areas, it's just going to be it's going to be harder for people to understand like what they're actually looking for. Let's see, iPhone's asking, so only the first liquidity push is for 300 pips. If we're taking others, it should be 100. Yes, that is correct, iPhone. iPhone said I haven't been taking the first one because it's so close to open. They're usually away from open, iPhone, because I mean they're usually pretty far from open. Like the one from today, they're pretty far from open because let me show you real quick. Or I can't show you right now, but they're pretty far from open. Like they're not near open price, unless if you're talking about open time. Yeah, they're going to be close to open time, but they're not close to open price because the liquidity. Yeah, that's the whole point. iPhone. They're supposed to be close to opening time because you're looking for the volatility on open. It's an opening trade, so they're supposed to be close to opening time. That's the whole point of the strategy. Yeah, because that's what you're supposed to be looking for. You don't want to be trading this like at like 11 o'clock when the volatility is dead, right? Like at that point, it's like where you're not going to have no volatility. Like for example, right here, 11 o'clock. If you're trading at 11 o'clock and you're too scared to trade at open, you're not going to even get any liquidity here because the volume is so low. So you want to take the trade on open. That's actually what we're looking for. Like the whole point of it is to take it like usually the first 5 to 10 minutes on open. Because like, so let me just show you real quick. Let me just, Barney's asking, your stream max quality is 720, Sean. Can we do 1080 in the future? You can't do 1080 on the stream. You have to be on the Zoom. So if you're on the Zoom, you'll have the highest quality. You're in real time, but you're not going to have it on the YouTube. So you got to get on the Zoom, Barney, if you want to have higher quality stream. Because you can't stream at anything higher than that. This is the highest quality you can stream at 720. So yeah, if you want to hop onto that, you can. But this is as high as it goes for the YouTube stream. All right, so let me just show you guys real quick over here. So this is 6:30. I'm just going to show you real quick iPhone just so that you can have a good understanding of like how volatility moves. So like here's like the first, or I'll just mark up our live session time, right, until 8 o'clock. So this is the high point and this is the low point, right? So if you measure this right here, you can see that the volatility is where it pushes about 1,500 pips, give or take, right? So if you want to take the liquidity pushes later, which I typically don't like to take, like for example, if you trade from like 8 to 10, right, or 8 to 9, this is usually where I'm done trading. So you trade from like 8 to 9. You'll see over here that the volatility is super low, right? Or it's a bit lower. So right here, it's moving like 1,500 pips. And then over here, it kind of dies down. It's going like 1,200 pips. So, I mean, the volatility is not horrible, but it's not great. So you kind of want to stick to opening price. And typically you can see right here between like 6:30 and like maybe the first, 10 minutes of the market, it usually moves pretty quickly. And that's why you want to get in and out of these trades quickly because you're going for 300 pips. It's not a huge move, but it's just enough for you to get in and out without getting caught. Okay, so Nathan's asking if I can show him how to mark up liquidity. Yeah, I'm gonna do that right now, Nathan. And I'm gonna show Mob Boy Dre another example. So let's go to yesterday. Today's Wednesday. Let's go to Tuesday. This trade hasn't lost all month. So I've been testing it all month. From May 1st up until now, literally like since like last month too, there's like no losses. There's 2 losses that happened or 3 losses that I have in my data set, but that's because there was news around those times. So like one thing that I'm going to pay attention to is to avoid the trade or avoid the entry if there's news that's too close, like say like 15 or 30 minutes before or after, because you're going to get market reaction to it. at a later time. So here, Nathan, I'm going to show you how I mark up liquidity over here. All right, so the main indicator that you want up is going to be the high-low indicator, Nathan. This trade right here was kind of tricky on Tuesday. If you guys remember this trade, I took this trade with you guys, but I actually moved my stop loss and profit. So look at this huge candle right here. Let me just clean up the chart. So when you get something like this is usually where you want to avoid the trade because, price is going to get all crazy on open. So if you guys look at this candle right here, see how big this candle is? And it's just a huge wick on both sides. This is usually a huge red flag because when you get this right here, price can really go either direction, right? Like it can just go anywhere because it's going to try to fill one of these areas here or even fill both. It might just spike back and forth. So I'll show you how I mark up liquidity here. But in the future, I'm probably going to avoid a trade if I see a candle like this pre-market because this trade right here was super risky. It still hit, but it was super risky. And let me just show you. So let me show you an example. Nathan, you're going to turn on the high-low indicator. From here, you're going to start on the daily time frame. So I go from the daily to the 8-hour, to the 4-hour, to the 2-hour, to the 1-hour, to the 30-minute, to the 15-minute, to the 10-minute. Those are the time frames I use. I basically go half time frame from the previous one. So daily, then I go to the 8-hour, half of that is 4-hour, half of that is 2-hour, half of that is 1 hour, half of that is 30, half of that is 15, and then the last one I go to is the 10. I don't go anything below that. So start over here on the daily. What you want to focus on right here is you want to mark up where these high lows are, high lows that have not been tested. So what you want to do first is just go to the daily time frame, zoom out. This is what it looks like when it's zoomed out. It's going to move it over a little bit. You're going to pull up the horizontal ray tool so you can draw the lines. You can use this or the line. I would prefer the ray. It's easier to see. So I pick the horizontal ray. I use this magnet tool right here, and I click on this so I don't have to keep clicking on the tool. It just stays in drawing mode. So what I do here is I mark up all of the high lows that have not been tested. Like for example, right here, this is a high low that has not been tested. This is a high low that's been tested because price already touched it. So I don't care about this right here. I just want to touch the ones or mark up the ones that have not been tested. And also the thing that you want to look out for is if the high low isn't established yet. So in order for it to be established, there needs to pass about like 4 or 5 candles, because if not, it could repaint. So for example, this one right here, I'm not going to mark it up because this right here can disappear if price drops lower. So I'm just going to go over here, mark up all the high lows that have not been tested. Right there, right there, right there, right there, right there, right there, and right there. Again, these over here, I don't mark them up because they're tested already. So like, for example, we have a high right here, but price already touched it. So I'm not messing with that. Same with these over here. I'm not messing with these. Just the ones that have not been touched yet, ever. So once we're done with the daily, we go down to the 8-hour. We do the same thing here. Mark this up. Got that all marked up right there. Go down to the 4-hour. Same thing. Mark up, mark up, mark up. Right there. Go down to the 2-hour. Same thing. You're just doing the same thing over and over again. You're just looking for the closer and closer zones, because it's going to go from really wide until like really close. So 2-hour, go to the 1-hour. Boom, boom. These have been tested. I don't care about those. Go down to the 30-minute. Most of the time, these higher zones are not going to get tested. You're probably going to get only the 10 minutes that's going to get tested because it's closest to price. So this is kind of irrelevant for you to mark it up. I just like to mark it up because I like to see where the other zones are sitting. Because typically, if there's a lot of liquidity sitting on one side, that's usually where the price is going to go through to. Right there. Right there. There. And then lastly, over here on the 10-minute, this is the last time frame. So this is where it gets a little tricky, because you can see this big candle right here is like one of the high lows. It probably shouldn't have been marked because this is like a news candle. So in the future, I'm probably just going to avoid that candle specifically, because you guys will see right now the market moves kind of crazy on open. But yeah, once you have that marked up, Nathan, you're done. You go back to the 1 minute. Now you're just looking for one of these areas to get hit. That's pretty much it. At the high lows right there. So you got a couple areas here to look at. The reason why this one right here is a little risky again is because it's too close, right? It's like way too close because the market's right here. And if price opens and it drops down like even like 200 pips, it's going to come and trigger the order. So I did take this trade with you guys. It was a little risky, but it played out perfect. I just closed out early because I just got scared. You know, when you get scared of a trade, just pull out, guys. There's no point in being stressed out over something when you can just pull out and just, you know, wait for the other opportunity, because there's going to be more opportunities. It's not the only trade for the day. So this right here, this is pretty much it. A question from Charles. He's asking, hi, Sean, for the liquidity push, no trend needed. No trend needed for this specific strategy. I mean, it's beneficial. Typically, I'd like to look for the trend in that direction. So like, for example, I'll go to the time frames over here and I'll see if everything's lined up. It's not necessary, it's not required, but it is preferred, because the last thing you want to do is get into a trade and then it just reverses on you because you're going against the trend, right? So yeah, again, it's not necessary, but of course it's going to be preferred. If you do have the trend, it's going to be beneficial for you. If you have the trend, and then also if you have like fundamentals and stuff like that, retail sentiment, but it's not necessary. So, all right, we got this marked up over here. This is the entry from yesterday. You can see over here, I marked it up yesterday. That's the trade we took, full TP. So this is from yesterday, May 16th. Here's the markup for May 16th. We were looking for a sell right here. 300 pips. All right, market opened right there. It blasted right through, filled the order. Then it pulled back super sharp. Dropped right back down. Retraced up super hard. So for this trade right here, I actually didn't enter until like price came back down. So for this right here, I actually didn't enter until later because it dropped down too fast. I wasn't able to put my pending order. I just ended up catching as it came back down. It came back down right here, and this is where I made my actual entry. So at this point is where I made my entry. You can see right here. For that day, I only locked in partial profit, 960, because I moved my stop loss in profit. Price dropped a little bit right there. Right here's where I moved my stop loss in profit. When it pulled back like that, it kicked me out in profit, but it eventually ended up coming right back down and blasting right through the TP. So that's the trade right there. That's the trade I took with you guys. You guys can see the red strip here. I locked in 960 on this account. I was supposed to lock in 6,000, but I moved my stop loss in profit a little too early. I was just not feeling the trade. It was too jumpy and I just didn't feel like taking it or holding on to it for too long. So I moved my stop loss in profit. It pulled back in retracement, kicked me out, and then it dropped straight into profit right here. So that is another example right there for the strategy. Barty's asking, he said, what's the highest you made in a single day on your funded account? And congrats on the 22K for the day. I think 22 has typically been the highest that I've made across all my accounts, Barty, because I typically don't take trades this big. Usually I'm taking like 1 or 2 trades and they're only for 100 pips. So, you know, I take one trade here for 300 pips. That's like triple what I normally take. So I think these last couple of days have been like the biggest, you know, trading days I've had. I get my payout soon too. So I'm just going to pay out, cash myself out, and then come back with a fresh account in the next couple of days, because I don't want to risk it. Obviously, you know, the market's not always going to be this way. So what I recommend is if you guys get funded, and when you guys get funded, just make a full withdrawal every week. I mean, every 2 weeks or every month, because it's better to get your payout. And then if you blow the account, you can just start another one versus keeping money in the account. It just doesn't make sense to keep money in the account. So whenever you guys get funded and you guys get a payout, I always recommend to reset your account back to whatever you started with. It's going to leave you with like not too much cushion, but it's better to have, like, for example, if I made 22K, I can buy 22 more challenges if I wanted to, right? Versus you like risking it on like another trade because you're getting greedy. So yeah, when you guys get funded, I always recommend to pull out your funds. It's better to have 22,000 cash versus having 22,000 of fake money in like your funded account. And then you end up making a mistake. Cause I've made that mistake before. If you guys saw me last year, I accidentally traded during a holiday, and then I ended up losing like, I think like 15K, because like you can't hold a trade over the weekend, and trading during a holiday is technically a weekend. So I ended up losing like the account and all the profit that was in it. So, you know, just a heads up for you guys. Once you guys get your payouts, Let's see. CJ is asking, will we be able to get our first payout in 2 weeks, or will they make us wait a month? I don't know. I haven't. I'm not really sure. I think for your first payout, you have to like at least trade for a month. If that's the case, and you want to just be careful, CJ, make your profit and then just stop trading for like just just wait for your payout. So I've seen a lot of people, it's crazy. Like they'll get funded, they'll take one trade, and then they'll have a really good first day. And then the next day they just revenge trade their way into like blow the account. And they don't even get the refund. So just make sure that if that's the case and you think you're going to screw up like that, just get your first profit and then just wait to get the payout and then get that refund so that, shit hits the fan and worse comes to worse, at least you have that refund so you can just get another challenge in the future. I've just seen a lot. It's crazy, guys. I've been like trading for so long with you guys that I've seen so many people just like blow their shit like in like one day because they get greedy. They get funded and they're like, oh, I want to make all this money. And it's like, dude, just do what you've been doing and you'll be fine. But everyone just wants to change it up as soon as they get funded. And it never works out. Like, trust me, it never works out, guys. I've seen so many people get funded and blow their account the next day. And it's frustrating, not just for them, but for me, because I'm like, dude, I worked with you for a whole month and you blew it in one day. And it's crazy. Let's see. Will said, in order to scale your FTMO, you have to withdraw twice, at least within a 4-month period, I believe. I mean, you should be withdrawing 4 times within a 4-month period, Will. So that shouldn't be a problem. I mean, you should never like hold over your profits like for 2 months. That just makes no sense to do that, right? Unless you're in the negative. So if you're in the negative, then yeah, of course you can make a withdrawal. But again, like I mentioned, guys, you guys should always make withdrawals because it's better to have cash and blow your account versus accidentally losing your account and then not getting your refund or anything like that. CJ said, I would be heartbroken if I blew my account one day after all that hard work. I know, it's crazy, CJ. I've seen like, of course, I'm not going to name anybody, but I've seen like at least like 10 people that's happened to in the group, and they're different people. It's like they take the trades during the live, and then as soon as they get funded, like Steven is one of them. If you guys remember Steven in here? Steven is still around because he just messaged me the other day. He's been asking me some random questions about like crypto brokers. So if you guys remember Steven, he had like a whole month where he lost no trades. He just took a breakout with us every morning, won every single trade, got funded. Like literally that same night he got funded, he did his own thing. I don't know what he was thinking, but he started to trade it during Asia. And then he literally blew his account like an hour after he got his funded account, which I don't know, it's crazy. I don't think he's ever recovered from that. He's still sad about it. I mean, I'd be sad too if that was the case. That dude worked so hard for like a year or 2 years, put all his like savings into this like funded account. He got funded and then he blew it like literally a minute after. He took one trade with no stop loss. And this guy blew his freaking funded account within like minutes. And he was so mad at himself because he knew it was his fault. So don't be a Steven. So work to yourself, guys. Don't be a Steven. Steven's cool though. I mean, I like Steven. It's just this guy just makes horrible decisions when he's not being told what to do. Like when he's on his own, this guy just makes the worst decisions you can think of. It's crazy. Yeah, Layla said Steven's our poster child of what not to do. Steven's cool. It's just that guy needs to find his way with the accounts. Because he could have been like, it's crazy. He could have like done really well if he just stuck to the game plan. But all right, guys. So I think that's it for the liquidity pushes. Next question was from Andrew. So Andrew wanted me to show him an example of a triple confluence. So let me see if I could find one over here. Andrew, these trades don't come up very often. I think we saw one. I don't remember if it was yesterday. It might be this one right here. No, it wasn't that one. Okay, it was this one right here. All right, so I'm going to show you guys an example of a triple confluence. All All right, so let me put the criteria over here for the triple confluence, 1 minute triple confluence. Okay, so we can't go back and look at the overall bias because this is from yesterday. The data right now is not going to show the same data from yesterday. You know, if you look at the fundamentals here, it's not going to show you what it was yesterday. It's just going to show you what it is right now. So looking at this right here, overall bias, we knew it was bearish on this day, on Tuesday, because my trade here was to sell. So I wouldn't have taken the sell unless we had a bias for a sell, right? So for this day right here on Tuesday, we're just going to assume that overall bias is bearish. So confirm overall bias, bearish. Second, confirm a valid K2 momentum signal right here. We have a valid sell signal. So we got a valid sell signal right there. Overall bias is sell, step 1. 2, confirm a valid K2 momentum signal. There's a valid sell signal right here. It's valid because it's a sell signal with a red candle within it. So this is a valid sell signal. Third, you want to confirm that the signal matches the trend meter. Down below, you can see the trend meter is red. So this confirms that we're in a bearish trend. Fourth, you want to confirm that price is above the K2 pivots for a buy or below for a sell. You can see we have a sell signal right here. It's below the pivots. Pivots are right here. So this is going to confirm step 4. For step 5, we want to confirm that price is breaking and closing past a K2 high low. So right here, we have a low. It's a lower low. You can see this counter here broke and closed past it. That's going to be step 5. And then lastly, you want to enter on the open of the following candle. So let's go over the steps again. Step 1, confirm overall bias. Overall bias was a sell. So we'll check that off. Step 2, confirm a valid K2 momentum signal. There's a valid signal right here. Check that off. Step 3, confirm signal matches trend meter. We have a sell signal here that's red. Trend meter down below is red as well. Check that off. Step 4, confirm price is below for a sell. Below the K2 pivots. Right here, it's below the pivot. So again, check that off. Step 5, confirm price is breaking and closing past K2 high low. This low right here, price is breaking, closing past it. Step 5. Step 6, you can enter on the open of the following candle. Right here, you're going to enter a short position. You got that set up right there. You let the trade run and boom, there you go, straight to full TP. So there goes an example right there, Andrew. If there's any questions regarding it, let me know and I can break down whatever you need help with. Otherwise, I can probably look for another entry here. So that's one from that day. This entry, again, this entry doesn't come up very often. So I'll see if I could find another one here. It's like hard to line this up. It's basically 3 strategies. So if you look over here, let me just put the criteria up again. And this is why it's 3 strategies. So, okay, so for this first step, this is pretty much the same requirement for almost every strategy. The second step, confirm a valid sell signal, and you want to make sure it matches with the trend meter, right? If you match those up together, that's a momentum scalp. So this specific strategy right here is a momentum scalp. You just put these two together. That's one strategy on its own. Momentum scalp entry or a pivot scalp entry, right? Going down to step 4, you want to confirm prices below. So again, right here, you match the momentum signal with price below the pivots. That's a pivot scalp entry, right? So you have 2 strategies right here, momentum scalp, pivot scalp. Fifth requirement, you want to confirm prices breaking and closing past the K2 high low. That's a high low scalp strategy, right? So you have 3 strategies lined up. That's why it's called a triple confluence. It's 3 strategies in one. So for this specific strategy, you're gonna use this one right here. It's either an intraday scalp or a momentum scalp. Either way, it's the same thing. So right here, KTUS 30 intraday momentum strategy, confirm the momentum signal, confirm it matches the trend meter. That's going to be one strategy right there. For the second strategy, it's going to be the pivot scalp strategy. So right here, pivot scalp strategy, confirm overall bias, confirm a valid momentum signal, confirm prices below or above the pivots. That's going to be a pivot scalp. So 2 strategies right there. And the last strategy is going to be a high-low scalp. So that's why this doesn't come up very often, because it's 3 strategies in one. It's basically 3 strategies off the same exact candle. So if all these strategies have a very high win rate, right, like a 90% win rate, you have 3 of them lining up, this trade's probably going to hit. Because if they're all in the same candle, odds are this thing's really going to push through. So that's how it's lined up. So I'll see if I can find another entry here, Andrew, to show you, but I don't know if I'll find one because this, as I mentioned, it doesn't come up very often. Actually, there's one right here. Actually, no, that's not one because I don't think the thing's lined up. And this was like after the session. So after 8 o'clock, it usually gets kind of jumpy. So I typically want to look for one that happens during the actual live session. But yeah, it doesn't look like we're going to have another one here. Let me see if there's one that came up today, possibly. But again, I typically want to make sure that it happens during the live session, because if it doesn't, it's usually a messy trade, or it's just not going to come up like how you want it to. Like today, Biden was speaking. So let's see. No. That candle was too big. I think this was when Biden was speaking. I think this whole area right here was when Biden was speaking. This push up and then the drop right back down. Okay, so there's one right here. Again, I mean, this is after the live session, so I probably wouldn't have taken it, but I'm just going to show you another example right here, Andrew. So like same thing. So we can't confirm the bias. I don't even know what the bias, I don't think there was a bias today, but we'll just assume it was bullish. So triple confluence, confirm overall bias. We're just going to say it's bullish. It doesn't matter if it isn't or not. This is just for the example. So confirm overall bias, we're going to say it was bullish, confirm a valid momentum signal, valid buy signal right here. Third, confirm the signal matches the trend meter. Trend meter down below is green. Fourth, confirm price is above the pivots for a buy. Pivots are down here, so that fits the criteria. And then lastly, you want to confirm that price is breaking and closing past the K2 high low. This candle right here is breaking, closing past it. Everything lines up. You take that with a long position right here. Go for a quick 100 pips. Let the trade run. And you can see that big candle, right? That's usually what happens. Like when you have an entry like this, it usually sets up for a breakout. If you have so many things lined up, you're like, okay, triple confluence, and it usually blasts right through TP. Just because it blasts through TP doesn't mean you should go for a higher TP. I mean, technically you can, but I wouldn't recommend it. Don't get greedy. Just take your wins and then get out of the trade. So there's another example right there. So, all right, guys, if there's any other questions, feel free to put them in the chat. I don't see any other questions here. So if there's anything that you want me to cover, just feel free to put your questions in the chat. I'm here to help you guys out. But I think that's pretty much all that we needed to cover today for the most part. Liquidity pushes on open, following liquidity pushes, and then the triple confluence right here. Yeah, no problem, Andrew. If you see them, it's a good indicator to take it. Just make sure the candle's not super huge, because you can see over here, like for example, this candle is fine. It's not a super huge candle. But if you get a candle like this technically could have been actually, no, the trend meter doesn't match it. So I wouldn't have taken it. But yeah, if you get a huge candle like this, probably avoid it, because price is probably going to retrace. Whenever you want to figure out if the candle is too big, just set up your TP stop loss. If the candle is bigger than your stop loss and price has to retrace up to the candle, yeah, you should probably skip it, right? It's not worth the risk. But all right, guys, if there's any other questions, feel free to put in the chat. Otherwise, we're going to wrap this up soon. I got a lot of stuff to do this week. I'm moving. I got stuff to do for Kodi's birthday. I mean, Kodi's birthday passed, but we still got stuff to do for him. Yeah, I think this week's just going to be kind of crazy. These next 2 weeks are going to be a little crazy, guys, because I'm moving. So it's going to be a little difficult for it's going to be a little different. Let me just check this real quick. Yeah, definitely. Willis is spending the rest of the night watching some more videos and reviewing notes. Looking forward to tomorrow and Friday. See you all tomorrow in the AM. Yeah, definitely will. So yeah, if you have any questions, feel free to pop in the chat. A lot of people will help you out. It's not just me. If I'm not available, like I think you popped in the chat the other day, right? Well, and I think Andy responded to your question. So yeah, if you guys have any questions, just pop into the chat, and then we'll see where this goes. So guys, if you guys are new here, I know a lot of you guys here on the YouTube, if you guys want to learn these strategies and have access to the indicators, these indicators are going to be a game changer for you. A lot of people don't like indicators, and that's the reason why I created my own. I don't like indicators either, but I use my own because these work for what I'm looking for. So if you guys are new here and you guys want access to it, just go to our website, click on unlock your free access here. It'll give you access to the course. I don't have the course page open right now, but the course pretty much covers all the strategies that we've covered except for the liquidity push. So if you guys want to review the liquidity push strategy, either rewatch this mentoring session or rewatch any of the previous ones. Like the past 4 or 5 mentoring sessions, just go to your YouTube channel, youtube.com/KodiKaiTrades. The past about 4 or 5 mentoring sessions, I've covered this in detail. I think this session will probably be the best one to review. So if you guys want to review the strategy, just watch this session, because I covered it in detail and I gave a couple of examples. Also, if you want to rewatch it live, because I've been doing this every morning, so just watch any live session for the past 2 weeks. And you guys will see me mark up zones, and you'll see me mark up entry points, and you'll see me take the trade, and you'll see everybody profit. And I think that's probably the best way for you to pick up on it. Barty's asking, do you watch any live trader stream whom you like? I don't even know anybody else who live trades like this, Barty. Personally, I don't know anybody who trades live like me every day. I know people who say they trade live, but they just post a replay of like them trading live, but they don't post every single day. So me personally, I don't watch anybody else trade. You know, I recommend, if you guys like to trade a certain strategy, just follow that person. Because if you watch my videos and then you watch the next person's videos, it's going to screw up your thinking, because nobody trades like I do. So like if you want to watch mine and then you watch somebody else that does something differently, it's just going to confuse you, because you're not going to know who to follow, right? So for me personally, I don't watch any other traders. It's just kind of pointless, because I already know what I'm doing, so I don't need to watch any other traders. But yeah, if you watch any other traders, just make sure to or just do what you want to do, and you'll see what I mean when you start to make mistakes. Because I've seen a lot of people who try to bounce from like different groups to different groups, and everybody trades a little differently. So it's okay to like experiment, but it's going to mess with your trade psychology, because nobody really does negative risk toward like I do, or at least they don't do it like as consistently as I do. And a lot of people don't necessarily trade live. Like they probably trade live for like people who pay for it, but they don't trade live on like YouTube stream. So yeah, I mean, there's a lot of other live traders out there, or like quote unquote live, but for me personally, I don't know any other traders who do this every single day. So, all right, guys, I think this is it for now. Let's see. Rev said, hey, Sean, I was able to get onto the Zoom through my desktop, just wasn't working on my iPad. Thank you for this session. Can't believe I found someone trading while I'm live. Looking forward to tomorrow morning. Yeah, definitely, Rev. I'm glad to have you here with us. You know, I'm always welcome to have new people in the group. You know, seeing you guys succeed is usually the main factor for me to keep doing this, because typically, you know, the live sessions do get kind of annoying because I get distracted a lot and I miss trades. But, you know, seeing other people succeed trading is always the best feeling, and why I continue to do this. So other than that, I think that's about it. So, all right, guys, I'll see you guys back here tomorrow for the next live session. If you guys have any questions, feel free to reach out. You guys can email me, Sean@KodiKaiTrades.com, or you guys can message me on Telegram. That's probably gonna be the fastest way to get in touch with me. So if you guys have any